This is another episode of me documenting the day-to-day process that I am taking to achieve long-term consistency in the financial markets. But currently, my performance does not indicate long-term consistency in the financial markets, so I need to figure out why that is and where I'm going wrong. And today is Monday, July 7th, 2025, and we did not have a good start to the week. And last week, we did not have a good end to the week. So, what I'm really struggling with right now is just my market approach, like how I come to the market, what trades that I plan to take, how I look at the market, how I arrive at a bias for the day, and how I execute that idea. Because that is really, really lacking consistency. And that really showed itself last month because half the time I went into those sessions not even knowing whether I wanted to be a buyer or a seller. And now, I'm still kind of running into the same issue. I go into these days just really confused on should I be a buyer? Should I be a seller? Like, what is my finite market approach? And I've defined that before. I'm just having a hard time sticking to that. So today, the trade that I took was a sell, okay? My bias today going into today was bullish, but I knew that the drawn liquidity was lower. So really, I was bearish going into today, but I stated my bias as bullish. So it's a bit of backwards thinking. So let's break it down. Let's go to the chart. Okay, let's start on a weekly time frame and just do a top down what I was thinking going into today. Give you all a good idea of what I was looking at. So here's last week's range. What I like to do is look at last week's range and think about how is this week's range going to paint based off of that, as well as the economic calendar. So if I pull up the economic calendar, what do we have this week? We really have nothing, right? The economic calendar is basically blank. So if there's no injection of volatility, if there's no news drivers, market's really not going to move, right? So I'm looking at this small range candle, considering the economic calendar, and I'm thinking this weekly range probably isn't going to do much. It may even stay inside the range of this. But I know that it can at least trade down to this weekly high right here, because it's probably going to deny this of a gap. It's probably not going to leave a separation like it does here. It's probably not going to do that here. I'm not expecting it to form a fair value gap. So I want to see the market drop for that level, plus we're at all-time highs. So no reason to pick a top in the market at this point. There's nothing that indicates to us that this thing should go lower. So I'm looking for the market to trade lower initially, okay? Keep that in mind. I'm looking for the market to trade lower initially, right? So why am I bullish going into 930? Doesn't really make sense, right? Then we look at the daily time frame. We have this down candle that I'd like to see the market trade down into, see if it can act as support there, and that old weekly high that I also want to see the market start to work towards. So in my approach today, pull that up, go to the notebook, go to the daily notebook. If we go to the daily time frame, a drawdown to both these P rays is likely given what the weekly candle should do. I'm watching for this in today's session, seeing if this down candle can support price. So here's where I have reverse thinking. I'm thinking that the market should trade down to these levels. Why not trade in that direction instead of waiting for the market to trade down to those levels, then looking to fade it? That's kind of where I went wrong today in my approach. It's backwards thinking. Even on the 4 hour, I'm looking at this gap. At the time, this candle's open before 9:30. 6 o'clock 4 hour candle. It closes at 10 o'clock. But I'm noticing how it drove above this high and failed. And this candle also has this large premium wick. It still closes inside of this gap. So if this gap were to support price, it wouldn't spend all this time consolidating inside of it. It should just trade it down into it and go. Like we do here. Boom, boom, go. Get into it and go. It shouldn't consolidate in this. It shouldn't consolidate like it's doing here. So that tells me that the gap is likely to fail. Not only that, we have to drive above this high. That's also failing. If you look at the hourly time frame, and look at all the smooth liquidity below as well, right? So even on the 4 hour, I'm thinking, could get a sudden drop that takes the consolidation range low and clears the sell side and drops into this gap, but still respects the 4 hour gap, which kind of sounds like a reach. I feel if that were to happen, we'd go lower today, not higher. So right then and there, I'm literally explaining to myself that if the market is to go down here, why would it go higher? It's probably going to go lower. And I'm also stating that the market's probably going to go to this level. So why not trade in that direction? So why is my bias bullish going into the day? Drop on the hourly, you get even more evidence. The 8 o'clock candle, I like how it dries above this high and this high, closed lower like that, overlapped this up candle, falling candle trades up into that up candle, closes basically indecisive, but I know the draw on liquidity is here. So on the hourly time frame, I'm also asking myself the same question, like why should the market trade back in this direction? Why should it trade back for these highs without at least trading for these lows and these lows first? That would make sense. And this gap is basically already failed. It's already gave up a ghost right there. So why should the market trade back in this direction? That's kind of how I arrive at a bias. I look at where the candles are closing, what stops are taken, where the market is smooth, and I ask myself, where is the damage done? What should the market move away from, and what should it move towards? At this point in time, looking at the hourly or going before 9:30, I'm thinking, okay, the damage is done above. I know we're on the sell side of the curve pre-market. The market should at least draw for these lows. So go back to my pre-market plan. I would favor that drop down because it takes sell side and deliver these discount arrays. I want to see it trade to anyways. I'm reading this going to 9:30. This is not bullish to me. I think this could push price to leave the range and take sell side. So why am I bullish? Doesn't make sense. I'm trying to find my mojo and bias and market approach. And once I get that down, you know, it's going to take some time, a lot of trial and error. I'm in stage two of the development. This stage requires a lot of experimenting. It requires a lot of failure because you're gonna mess it up a lot. And that's what I'm going through right now, right? So stage 2, developing. In this stage, you're basically developing your playbooks, but you first have to understand your market approach and understanding. Like I'm still here. Like right now, I'm trying to work on backtesting playbooks that I think that I have, but I still don't have a market approach. So I think that's where I'm kind of running into some frustration right now and recently and just facing resistance and everything kind of feels hard right now. It's because I don't have my market approach down. Setups come after you know your approach to the market and what your market understanding is. Learn to read the market and understand the logic behind it first. Then setups will come. Market understanding is the logic behind the concepts you trade that explains why the market goes up or down. That logic goes into your playbook. Your playbook is built off that logic. So, making this video right now, I can see where I'm kind of going wrong. Could be doing things a bit backwards right now because I still haven't defined my market approach. I still don't know how to arrive at a bias. I still don't know how to arrive at a draw on liquidity. If I'm being completely honest with myself, a year into Trading ICT, still don't know how to establish the draw on liquidity. Still don't know how to submit to it. Still don't know how to frame a daily bias. Still don't know how to do any of that shit, which is totally fine. The first step to problem solution is problem awareness, right? So, where do I go wrong on my trade today? On the 1 minute, this is what I'm seeing. Market opens, rallies up, rejects the lower quadrant of the opening range gap, which is basically just that gap opening that we have at 9:30. Here's where we settled on Thursday at 1:14. Here's where we opened today at 9:30. That opening range gap, right? Rejects the upper quadrant. I'm already thinking that the market's on the sell side of the curve based on what I see pre-market, how this high has traded above this high. I'm thinking it's going to go down here. So when it does this, but it rejects the upper quadrant or the lower quadrant of the opening range gap, and that up candle gets overlapped with speed, distance, and magnitude very fast and suddenly. I'm seeing this as a reversal, and I sell the up candle right here, targeting this low down here. But you can see that doesn't happen. Why? Because of the condition. Because of day of week and economic calendar tells you that this is not a good day to be trading, which is my second lesson from today. Day selection. This is not a good day to be trading at all. Why? Because let's look at the economic calendar. It's blank. It's literally blank, right? So Monday, no news drivers. I'm doing a lot of backtesting right now, and I'm figuring out the hard way that Monday, no news driver is literally not a day that you should trade at all, just like ignore it. There's no news driver today, right? It's Monday and there's no driver. So how can we expect the market to paint? Like this, sideways, nothing, literally nothing. Nothing that you want to be trading, at least, or at least if you are trading it, you got to know what you're dealing with. Today, I knew the market was likely to be like this, but the way that I was trading was way too aggressive for this day and this condition. I shouldn't be selling the market short within the first 10 minutes of market open. I should be sitting back, waiting, let the conditions become clear to me. Be like, okay, the market is obviously high resistance. We're doing a lot of back and forth right now. We're in a consolidation. It's probably not going to be worth trading, right? So that's when I take a step back and realize, this is probably not a good trading day. But I never gave myself the opportunity to do that because I was extremely aggressive in my approach. I see this boom, boom, I'm selling short. I got tagged in on this candle. Go back and review the trade. Dashboard. So I'm selling short this up candle. I'm viewing this as a high probability order block to take the market lower and clear out this level down here. Now that doesn't even deliver until noon. Before then, the market does what? Literally nothing. So it's just day selection. How you should approach price based on day of week and economic calendar, that's going to tell you day selection. Is this a day worth trading? Is this a day worth putting risk behind? No, it's not. Not at all. I should have done nothing today. Instead, I'm off to a bad start to the week. My confidence takes a hit. And now I have to dig myself out of this hole, out of this drawdown from last Thursday and today. Pretty sure last Thursday was also just not an ideal trading day. The market just went higher, and I was looking to fade it. So my approach was incorrect on that day as well. But today, my approach to the market was incorrect. I was bullish, but I still sold short, bearish, knowing what the market was drawing for. So 2 lessons from today. Number 1, my market approach. If I know that the market is likely drawing for some level, why not trade in that direction instead of doing reverse thinking and saying, I want the market to trade to that level and then see if it can reverse there. And just trade in that direction if I know that's what the market's reaching for, right? And then number 2, day selection. Day of week and economic calendar. That's going to tell me when I should engage. When should I be involved? Obviously, today's not the right day to be involved, right? So there's a quick lessons from today. Let's review the daily journal and see if there's anything that I missed. So obviously not a good start to the month at all. We're in a hole right now. Let me go to the daily notebook. Another thing is I feel like I'm journaling way too much because, this is a bit like information overload. When I do a monthly review, it's kind of hard to review everything because this is just a lot of fucking information. It's a lot, But we can go to, what did I learn? Today's painful loss taught me a lot about day selection, day of week, economic calendar, pre-market, overnight volatility. That's right. That's what I forgot to mention. So another good indication that today was likely to literally do nothing was no overnight volatility, right? The market just stays in a range. Like that. Doesn't do anything. No overnight volatility, no pre-market volatility. When the market does this, and we have a range going into the open, I note from backtesting, I've found that those are the days that are definitely more difficult for me to trade and don't necessarily present my model criteria. I like the days that have large gap openings. Those are the days that are easier, much, much easier for me to read and that actually fit the criteria of my model. So today revealed what an ideal trading day looks like versus a shit day. An ideal trading day is going to have volatility in the overnight pre-market session that's going to create a gap opening. A shit trading day is going to lack overnight volatility, lack pre-market volatility, have no news driver, and this is probably Monday. I'm learning what characteristics make up a bad, shitty, slow trading day versus those that make a good trading day, so I know what days to really play defense on and what days to be aggressive on, because today I was really aggressive on a day that required a defensive approach. So if I know a day is likely to present shit conditions, then it's probably not smart to go in and sell within the first 5 minutes, especially if that first 5-minute close tells me conditions probably aren't going to be good. If I look at the first 5-minute close, and this is what I knew before I put risk on, basically close is indecisive. It's not leaning overly bullish or overly bearish in the first 5 minutes. So that's a good indication that I should sit on hands and wait, especially after it's cleared the low a day. It's taken that low and closed back inside the range. That's an indication that's probably going to do something like this before it does what I expect it to do. And then I'm learning about the mental situation that puts me into really bad trades. I'm indecisive whether or not I should take that setup, so I just leave risk out there and let myself get tagged in. I think, I'm actually doing this? Oh, okay. Which is basically when I'm just extremely indecisive on whether I should take this setup or not. Like here, I was really, really hesitant on being a short seller here because I came into the market looking to be a buyer. And it was really early into the open, and that 5 minute close didn't really give me what I wanted to see. So I'm hesitating. I'm thinking, like, should I take this trade? Should I not take this trade? I don't know whether my limit order is out there. I don't know whether I should cancel it or leave it out there. And eventually, I can't make a decision, so I just leave my limit order out there and let myself get tagged in. Never a good idea, never a good trade when that happens. It's a repeating situation. Now let's go to backtesting, which is what I'm working on outside of market hours. Let's go to session results. So even in backtesting, I'm still a break-even trader, but what I'm doing in backtesting is actually helping me learn so much so fast. These are my backtesting results right now. So you can see I got a lot of work to do, a lot, and it's not looking good. But you know what? I'm literally treating this as if it were an actual trading month. So at the end of this, I'm going to go back and do a monthly review and study all of these because I have daily notes for every single day. Like this, right? So when I'm doing a backtesting session, before I start trading that session, I say, what is my bias? What setup am I looking for and why? And would I take that setup and why? And then post-market, what was my approach versus what happened and what I learned for that day? So I'm going in, I'm filling out all this information. I'm taking a lot of losses. I'm taking some wins. I'm understanding my playbooks. I'm understanding what days my playbooks are likely to present themselves. I'm understanding what days they're likely not to present themselves. Like, for example, the lesson that I learned today is the same lesson that I learned backtesting this month in July of 2022, when the market lacks overnight volatility and it's just a consolidation. There's no volatility overnight or pre-market, and there's a small gap opening. That kind of market is not likely to present my setup. Those are days where it's easy for me to hurt myself. Like, for example, let's just go into this trade right here, right? And I'm still going through the process while I'm backtesting. So this is just like multiplying my experience factor over and over and over again, because I'm able to get in there and get more reps in, right? So this trade, we can see that going into the open, what do we see? Pretty much for the most part, we lack overnight volatility besides this one drop down straight lower in the Asia session. Lack of overnight and pre-market volatility, and then it's just one-sided, leaves that range that way. So my playbook, my model is not like a continuation type trending day model. It's a reversal type of model where I want to see the market move one direction and then move the other direction. If it's one-sided, it's probably not going to present my model. But these are things that I'm learning just from backtesting. Like if we go to this, for example, right? I want to see the market drop lower first, then reverse, and that's it. This has a gap opening. It has good volatility in the overnight session. Pre-market, we see a consolidation. Takes the sell side liquidity of the range first, leaves smooth buy side above, drops down, SMT divergence. It's exactly what I want to see. So it's basically a quick little catch up on where I'm at right now. Numbers not looking good. The work is being put in. Once I go back and review, then I can expect to see some results. But right now, I'm definitely facing a lot of resistance because I'm not getting those results that I once was. I traded really well last week. That's only because I was forced to do less. Now that I can sit in front of the computer every single day, it feels like I can't really trust myself to protect myself from the days that I should not be trading at all, if that makes sense. For example, today, I shouldn't have traded at all. Thursday, I probably shouldn't have traded at all. These days, I did good. Or maybe my approach to the market was wrong and that didn't allow me to catch the real move. So a lot of the mistakes that I'm making have to do with day selection, where I'm just putting myself in situations where it's very easy to hurt myself, and maybe my model criteria isn't even present. And number two, my approach to price is still not clearly understood and defined. And that's leading to a lot of mistakes intraday where it makes it hard to execute because I'm lacking confidence in what the market is showing me. Like, I know that this is probably a trade idea, but I'm lacking confidence in that because of how I approach the market. I'm just missing moves entirely because I'm just getting the bias entirely wrong. So those are probably top two killers for me right now. I know what they are, and now it's time to work to solve them. So that's it for this video. Talk to you next time. See ya.